Hey, how's everybody doing today? Oh, man. It's been a little rough, guys. Not going to lie. Posted this over the weekend. This before things got really bad. Why are you still holding alts? I don't know if you guys are feeling the same way.
Because it's fun. We're having fun.
Because that is basically how I think a lot of people are feeling right now. It's been a brutal, absolutely brutal year, guys. We're going to talk about some of the rumors that are swirling regarding Wintermute and Binance. These are rumors at this point, nothing confirmed, but there is plenty of evidence to suggest that there might be some credence to some of these claims. Also, going to go through something interesting is basically a thesis behind the consolidation of Bitcoin we've seen this year, and just a kind of a theory behind that I think is really worth going through. So we're going to run through that, and we're going to talk about some of the deep end stuff happening as well. There's a lot of things that are still lining up, but man, we have seen black swan events this year, and the fallout has been real. There's no doubt about it, guys. And the one, of course, that has been surfacing today actually is not something new. Back on October 11th, there were rumors that started coming out about potentially Wintermute being completely wiped out. It says that CZ and Binance were dragged into these conspiracy theories back then. So this is right after 1010. Of course, 1010 is the date that will go down in history as the biggest liquidation event in crypto history by far, worse than anything we've ever seen before. And I think one thing is certain, y'all, things have not been the same since. The market structure, everything has felt really fucking weird since that happened. And it's been pretty ugly, frankly, ever since it took place. Of course, there are other rumors that emerged at the same time that crypto.com was going under. Those did not seem to be true. Crypto.com seems to be doing just fine. But then we had some reports coming out, and we're seeing a lot of it now in the timeline popping up. This is from earlier, though. Says Wintermute is, in fact, suing Binance. And it says they're not the only ones that got wrecked. They lost hundreds of millions, but there are names of, says, I have the names about who is going to blow up, and it's not going to be pretty unless CZ finds a way for compensation. So this is going to be really bad. For weeks, everybody in the backstage has known. They're saying that this is why a lot of people have been selling off in preparation for this coming to light. Now, again, this account, has 12,000 followers, but I am seeing some bigger accounts start to report on this. Again, it's not confirmed. These are allegations. Okay, they're rumors that are swirling. That said, this is a clip I'm going to play straight from the CEO's mouth of Wintermute. But if you remember, it is kind of odd. Like there was some weird price action. There's some people getting liquidated that said they shouldn't have. Binance then took it upon themselves to send money to people that lost money. That all seemed kind of weird. And then you have the CEO of Wintermute in an interview. I'm going to play from this point right here, talking about this situation.
I think is where we will see a lot of, basically challenges from a lot of trading firms to a lot of exchanges in the coming days and maybe weeks. Because I can tell you, like for us, for example, some of the ADL fills we got were very strange. So it just didn't make sense for us. Like there were like some perpetual positions where we got ADL, like on Binance and some other platforms, and like, okay, it's fine to get ADL if you can hedge, but also like our challenge was like sometimes you'd get ADL to a completely ridiculous price. It just didn't make any sense. Like the most ridiculous case, I think it was, I don't know, price we got ADL was, let's say $1 and sorry, we got ADL at $5 and the thing was called trading at $1. So, and then you just don't even have a chance to hedge basically anywhere. So you just stuck with the loss right away.
So again, that is from the CEO of Wintermute and calling out Binance directly about some of the crazy stuff that was happening. Of course, ADL is auto deleveraged. So they took some massive losses off of that. And that is the rumor that's swirling right now. And of course, this was from Reuters. They said that, participants remain hesitant as they process what became the largest liquidation event on record. Of course, again, talking about October 10th, this caution persists amid ongoing speculation about specific vulnerabilities that may still exist in the system. So, this, if true, would make sense as to why we've been seeing such weird price action in the markets the last few weeks. And frankly, like, things have been really, really bad since the big fallout on October 10th. So, again, we don't know this for sure. And I want to make that very clear. But this is not the first time that Binance and Wintermute have been drug into allegations of, being a bad actor in all of this. Okay, so this account is talking about how, and he's not the only one. There's a lot of accounts that have called this out for a long time now. That in the past 30 days alone, 34.5 billion has been traded between Binance and Wintermute. Binance will send 10 to $100 million chunks of crypto to Wintermute wallets hours before every major dump. And then they will go ahead and market sell on Binance, triggering cascading liquidations. Wintermute receives $700 million from Binance. Spot sell walls appear on every pair. Then they liquidate a bunch of people. Wintermute then buys back at a discount, makes a bunch of money. Binance pockets funding fees, etc. These are allegations that have been going around a long time. And this account in particular, it's a big account. Marty Party has been calling out this stuff, tagging Paul Atkins, Cynthia Lummis. Like, he's been calling this stuff on chain for a long time. Now, is there anything to look forward to? Potentially. And I will say this much. It hasn't stopped. I do want to call it this article, which is also pretty sketch, by the way, from Wintermute. This came out like a few days ago before this recent cascade. They put out this market update talking about how, hey, risk appetite's coming back. If they knew they were going to be suing Binance and that there's going to be further fallout, this is really effed up of them to be putting this report out, basically trying to get people to enter the market again. Says that risk appetite's returning as CPI data is improving, blah, blah, blah. Positions looking cleaner and liquidity is improving, setting up for a constructive backdrop for continued momentum into November. Okay. So all of it seems very weird to me, that's for sure. And I think we'll learn more in the coming days. That said, this is the kind of silver lining here, is the market structure bill could slash crypto manipulation by 70 to 90% overnight. It could put a stop to a lot of this bullshit that's been taking place. It says that it's not perfect, but it's the biggest anti-manipulation hammer Congress has ever swung at crypto. We're talking about the Clarity Act, of course. We'll talk more about the timeline on this. We've covered it before, but it says that it bans wash trading. So, or fake volume. 40% of Bitcoin volume on Binance, Bybit, OKX is wash trading to liquidate leverage traders. So it's been illegal for a long time in traditional stock market. Says that they'll have real-time surveillance and auto flag 90% plus order cancellations and offenders to be delisted there. Stop spoofing, and it'll stop front running, which would be a felony. And it says that the CFTC has already fined Binance $4.3 billion for wash trading in 2024, just last year. Okay. So a lot of this stuff will be put to a stop with the Clarity Act as it's written today. So that would be big news. We really need this to happen, guys, because there has been a lot of funny business this year. There's no doubt about it. Probably more than we're aware of. So what about the Clarity Act? Well, as you know, the government shutdown has made things difficult to get passed. That said, there is a couple of articles I want to touch on here. Says that in this one, Clarity Act has an 80% chance of passing by 2026, so by the end of this year. We have this guy is with Bitwise. Bitwise Chief Investment Officer. Says the Clarity Act has been touted as the most important crypto legislation in U.S. history. So obviously, we've already had, the Genius Act for stable coins. This is touted as the most critical legislation that will ever get passed, or has been passed to this point at least. And he says that he'd put it at 80% to get approved by the end of the year or early next year. But it's not just him. We have similar things coming out of our own politicians here. If I can get to this freaking. The heck? Here we go. says, according to, okay, I thought I had it highlighted. According to the Senate Agricultural Committee Chair John Boozman out of Arkansas, he said they're working daily to complete their section of the legislation, which would establish a regulatory framework for digital assets. He expects the committee vote before Thanksgiving, before adding, we're going to get it done this year. So that's big news, guys. And that is one catalyst that, in my opinion, has not been baked into markets for crypto. And obviously right now we need some freaking good news, because it just seems like just bad news after bad news. And I believe that something has broken behind the scenes. And that's why I wouldn't be shocked at all if there's this stuff happening with Binance. There's a lot of people that got liquidated. You look at like some of the pricing oracles, like what was it? Cosmos went down to like 0.001. Like there's no way. And people have said they were trying to make purchases when those dips were happening. They were unable to get purchases to go through. Definitely some weird stuff was happening on October 10th. And I think we're still seeing the fallout to that now. Unfortunately for us, some of the bigger players, I'm sure, already caught wind of it and were able to exit positions. And I think that's a lot of the sell-offs that we've been seeing to this point. Obviously the big question is, when is that going to stop? When can we see a reversal? And these are the things you can't really predict, man. These are, it's called a black swan event for a reason. These things can come out of nowhere. And we've seen a lot of that this year. Like, some of it's Trump, but man, pretty brutal stuff there. Suburban in the house. What's up, sir? Appreciate you, man. We got Kevin in the house too. What's up, sir? Oh man. All right. So, of course, we are trying to get that legislation passed. Things are gotten delayed from the government shutdown. Where we stand on the government shutdown? Well, on the first 30 days, the government borrowed $600 billion of debt. It's an average of $19 billion a day. Yikes, that is not good. It says that 3.2 million airline passengers have experienced cancellations or delays. Guys, if this persists through Thanksgiving, it's going to be really, really bad. Okay. Suburban, you have an excuse not to fly, so it'll be good. But this would be really, really bad, guys, if this thing persists through Thanksgiving. Let's hope not. It says the U.S. on track for a 61-day shutdown, which is 7.5 times longer than the average. All as the labor market crumbles. So we've got some job reports coming out on Friday too. Good Lord. I can't imagine those are going to look good with all the layoff announcements we've been having. Things have been moving in the wrong direction there. Poly market right now, as far as the government shutdown goes, looking like 52% chance that this thing extends past November 16th. So, whew, buddy, not great, not great. And this is having an impact on our banking system. I think some of this is bleeding over into legacy markets, into the traditional stock markets. I think that we are getting some of this too. If you look at the liquidity issue in our banking system, banks are drawing on liquidity from this repo market. We had $29.4 billion of liquidity drawn on here, and today another $7.75 billion. And there are some people saying, "Oh, it's the end of the month thing." It's still happening today, and a lot of this, is reportedly because of the government shutdown. But this is a liquidity crisis. There's some concern too that there might have been something that's broken in our traditional finance system, whether it's another Silicon Valley Bank situation or something of that nature. Regional bank, we've been having the regional bank scares recently. There are some rumors in the traditional markets outside of crypto that something has broken behind the scenes here, and this is a red flag, and that's why we've been seeing a sell-off in the markets. We also had Scott Bessent, the Treasury Secretary, interviewed over the course of the weekend, saying that parts of our economy are in a recession. You also have the U.S. all of a sudden clamoring and touting China for how great our relationship is and how everything is just nothing to see here. Everything's so good. And even like Pete Hegseth with the military talking about, hey, our military operations are working with China. It's like something seems a little off here that you guys are like pushing so hard for some good news in the markets. Like, what is coming here? What's happening behind the scenes? There seems to be some concerns. And when you look at this report talking about, what does this mean for markets? What's the Fed not telling us? Okay. Because this is not normal to have this type of draw on the repo markets. Man, says here, if liquidity is tightening, risk assets like stocks and crypto may feel the pinch because the buffer, excess cash, easy borrowing is thinner. Also goes on to say here, though, if this continues to swell, this confirms that there is stress mounting. Okay. So banking system not looking great right now. It's something we have to keep an eye on. Doesn't mean that like everything's going to just collapse, but if we continue to see these liquidity stresses, that's a bad sign. We need to get the government open again, man. Like for reals. One other rumor to add to the list. I don't know if there's any credence to this one, guys, but there's a lot of reports that were coming out that MEXC is collapsing. I think there were reports floating around. I think a lot of people probably withdrew their funds. There are some reports that people were unable to withdraw funds, that they were frozen. But it does say that $2.4 billion net outflows happened in the last 24 hours. Another day like this could be really bad. They did respond directly and said, hey, proof of reserves is updated, was updated yesterday. It's updated daily. You can go in and see your assets on chain, etc. So the fact they're responding to this, they're showing on chain that they have people's assets. I mean, I don't know. I mean, they list a lot of coins. I have to think they're a pretty profitable exchange. So I don't know if there's any credence to that. I think it's a lot more likely that the Wintermute Binance situation is legit. But for now, again, it's still a rumor. We need to see a verification of that. But there's no doubt that our banking system right now is having some serious strains. And I think that is bleeding over to markets. Now, what could that be? I think right now that we could be seeing a sell-off because people don't know what it is. Once we do know, maybe then we could see a reversal in markets. Because there are still some catalysts coming, guys. Like we still have QT ending on December 1st. We still have very likely QE beginning as well. Let's be real. Whether they call it QE or do it in a stealth manner, who knows? But we've got to keep liquidity moving into markets. It's the only way to keep this freaking, Ponzi that they call our financial markets going, where they can just continue printing money whenever they want. And then you have, let's be real, like let's look at the likelihood of a December rate cut, actually, because I know that's one that, Jerome Powell really shocked markets last week, talking about how, hey, we're far from a rate cut in December. Well, right now, at least, you see that big drop. That was after he said that, from 90% down to 67%. So, that's the good news here, actually, is that right now markets are only pricing a 67% chance. So if we do see a rate cut, that means there's some upside, that other, a third, right? 30% chance that it's not happening. That's upside that's not baked into the market. Now, the downside risk is if we don't see a cut, and 2/3 of the market is expecting that, that's not good, right? So that'd be some major downside. But a 90% likelihood, that would mean that leading into that, most of the upside there is already baked in. Okay, so that is why we saw the adjustment down in markets. So a lot of uncertainty right now, a lot of, and the job report on Friday, we'll see what that looks like. Interestingly, though, the last time the job markets came in poor, markets rallied because they're like, well, that means Jerome Powell is going to cut rates. So it's a weird and a very dynamic time right now. But I do want to talk about this reporter about Bitcoin and this guy, Jordy Visser. And I put some highlights in here. And I think it does a really good job of explaining what we've been seeing throughout the course of this year. And it's the silent IPO is what he calls it, Bitcoin silent IPO. And I think there's some real validity to this. And I want to run through the details with you guys. But it says this consolidation isn't what you think. It goes on to say here, and I think this is very, very timely as well. The distress is real. Sentiment in crypto right now is frankly brutal. I can tell you, for me, being in since, I guess 2019, 6 years in the market, I even with FTX, I don't remember it being this brutal. I mean, it was bad, but I think, especially for people holding altcoins, though, we've seen Bitcoin hit new all-time highs this year, and alts have just been bleeding since January. I just think that the sentiment's horrible. So I agree with this. It says the S&P is flirting with all-time highs. NASDAQ has been on its tear. Gold broke through 4,300. Tech stocks are rallying by every traditional measure. We're in a risk-on environment. Money is flowing to all risk assets except for crypto. That's true, Nate. Got Nate Harper in the house with Deep Network. This has been extremely drawn out. I think people are exhausted. I mean, I'm freaking exhausted, I'll tell you. It says in Bitcoin is doing nothing. I mean, it's been grinding. Let's be real. It has been grinding. It hasn't dropped like we've seen with alt, but it has been grinding and consolidating. So what is the cause? He says, well, if it isn't broken, what if it's finally having its TradFi version of an IPO? Okay, so he goes into explaining his thought process here. So when a company goes public and early investors begin to sell their positions, the stock often consolidates, even during broader market rallies. Why? Because there's a specific dynamic at play. Early investors aren't panic selling. So you can think about this, early Bitcoin investors. They're methodically distributing their positions. They're being careful. They don't want to crater the price. They've been patient. They've waited years for this moment. They can wait a few more months to do it right. It's crashing. Bro, you do realize that 11 months ago, we broke 100,000 for the first time, and Bitcoin's sitting above 100,000 right now. So this is, I mean, if you consider this a crash, you probably weren't around for FTX when we dropped back down to $20,000 from, an all-time high. So I wouldn't call this a crash necessarily. I would say this is mostly consolidation throughout the year. It says, meanwhile, new investors are stepping in, but cautiously. They're not chasing. They're accumulating on the dips. They're waiting for the distribution to complete before getting aggressive. Okay. Says on a recent, and this is kind of the Bitcoin equivalent here, on a recent Galaxy Digital earnings call, they announced that Galaxy had sold $9 billion worth of Bitcoin for one customer, one OG holder. And here's the thing, that one OG isn't alone. The on-chain data tells a clear story if you know how to read it. Old coins that haven't moved in years, some dormant since single-digit price days, are suddenly active, not all at once, but steadily throughout this year, especially since summer. And I'll tell you, this does go to show in the last 30 days, we've seen 400,000 Bitcoin from OG holders sold. That's almost 2% of the total supply of Bitcoin in the last 30 days. And we're still holding above 100,000, by the way, guys. Pretty impressive. Says, look at the fear and greed index still. The social sentiment, everyone's demoralized. Retail is capitulating. Yes. Look at this. I mean, since we've started to see really this big sell-off, really since beginning of October, we've been in extreme fear. We did get to a neutral for like a couple of days, but yeah, Bitcoin's still above 100,000, but people are kind of freaking out, right? We've seen the fear and greed index currently sitting at, let's see, fear at 42. I want to see what tomorrow looks like. This updates every day. It will update in an hour and 30 minutes. I bet it's going to be freaking atrocious after what we've seen today. But it says, put yourself in the shoes of someone who mined Bitcoin in 2010 or bought it at $100, $1,000, held through Mt. Gox, China bans, 2018 bear market, COVID, etc., regulatory uncertainty, you name it. For the first time ever, you can actually exit your position without destroying the market. For years, the liquidity didn't exist. Try selling $100 million back in 2015. You would have crushed the price. Try selling $1 billion in 2019. Same problem. Couldn't absorb it. ETFs are providing institutional bid. We have companies adding to their balance sheets. Sovereign wealth funds are getting involved, etc. This is the first time these OG holders have been able to sell their Bitcoin without destroying it. And the liquidity is there for the very first time. And I think we're seeing this changing of hands this year through this IPO concept. I like this breakdown. It says right now, Bitcoin's fundamentals are arguably the strongest they've ever been. ETF approval, the thing that people said never would happen. Institutional adoption is accelerating. The halving event occurred on schedule, like clockwork. The network's as secure as ever. Hash rates at all-time highs. Stablecoin adoption is accelerating. Tokenization is the way of the future, about to explode in volumes. crypto dreams are finally becoming a reality. And buyers are stepping in, just not that aggressively, and they're accumulating, and they are stepping in. I mean, for us to be able to see 400,000 Bitcoin hit the market in the last 30 days and still holding above $100,000 is pretty unthinkable, really. If you think about what happened in the last market cycle. He goes on to talk about, he uses Amazon and Google's IPOs as an example of where this happened, where the early sellers ended up distributing over time and very cautiously selling. They saw a consolidation period before things broke out again. And we're seeing the same thing now. Let's see, I have some more highlights down here. Says the IPO distribution period typically lasts 6 to 18 months. He says we're way past the 6-month time frame for Bitcoin. So he does expect more consolidation. Could continue to be frustrating for people that are not rallying with risk assets. And we've seen this. I mean, we're seeing stocks trade like freaking meme coins recently. Bitcoin's just been really boring and chopping. It says expect sentiment to remain poor for a little while longer, but be wary because there will be no signal. It'll just start because the good news is already present. He goes on to talk about a few other things. And I've talked to Tyler about this a lot and Suburban. He expects less volatility. You're going to have a lot more longer term minded holders, less people trading Bitcoin. There's also more liquidity. So instead of having the 80% drawdowns we used to have, maybe we see like 50% drawdowns. But that also means that instead of 10x rallies, maybe we see 3x rallies. So there'll be less volatility over time. There are a couple other things he called out here, but let me see if there's anything I want to cover. The sentiment will only improve after distribution is substantially complete. So that's the big thing. They're waiting for Bitcoin to catch up to stocks. They're worried about the 4-year market cycle. Be patient. Once the heavy selling pressure lifts, once the patient accumulation by institutions has absorbed the OG supply, the path becomes clear. And guys, when you look at the Bitcoin balances right now, according to CoinGlass on exchanges, I mean, this is pretty crazy. So you got your OG sellers that have been selling, but just going back to January of 2024, you had over 3 million Bitcoin on exchanges. Today, guys, we're sitting at, where are we at here? Oops. I wanted to say, let me reload this page. I think I need to go down to $2 million on exchanges. So we're down a million. Is that right? Yeah, down to 2 million. It's weird that they have the chart set up like this, huh? So we're down 50% from where we were a year ago on exchanges. So guys, the buying's taking place, the OG holders, and I think it's actually a good thing, that the OG holders are distributing. I think the more holders you have, the better, really. The more decentralization, you don't have to worry about one holder dumping on the market. I think you have more people that would be willing to buy in if they see that more people are holding the asset. So I think this is a healthy thing, but it makes a lot of sense that a lot of these OG holders are selling. For me, when I was seeing this at first, I remember in the summer, I was like, what do they know we don't know? Like that's not good. But if you have $8 billion in Bitcoin, like, and they go in that article, they're like, maybe you have, your kids are through college and you want to just enjoy your retirement. Maybe you want to buy a freaking yacht. Maybe, for these people that are sitting on like $8 billion, like that's generational wealth for multiple generations to come. I mean, you play it right, like that, your family can live off that forever, off interest. Like there comes a time where it makes sense to sell for individuals. And they finally have a path to do so. So I think that makes sense. And then again, I mean, you look at the price action here, because we're still holding at 106,000. Now, there's a lot of people right now calling for us to drop, down into 98,000, 97,000, maybe. We don't know. We don't know what the fallout from October 10th is going to be. If this Binance situation really blows up, certainly That's a possibility. But again, it's really important to remember. It feels like it's only been 11 months. Do y'all remember when we broke 100K 11 months ago? It was like December 5th, I want to say. And everyone was like cheering. I mean, we couldn't believe it. We broke 100K. And now 11 months later, we're sitting at 106,000. Everyone's like, crypto's over. That's kind of crazy, right? I get it though, for people that are holding alts, like we've gotten absolutely like wrecked on our positions if you've been holding this whole time. Like a lot of the projects are way down. In fact, if you look at this post here, the top 100 token on average is down 50% from its all-time high. And that's the top 100. I mean, smaller caps are down even more. When you look at like Solana, okay, Solana is one that we're now back to August when I was talking about, hey man, I'm longing Solana, and it ended up being a great long. We got up to $250, but then we had all these events happen. We had the spot ETFs pushed out because the government shut down. We had the October 10th liquidation event, after, following the China tariff situation. And here we are. I mean, we're back to where we were back in August. And you know what's wild about that? We finally have the spot ETFs launch, and here we are, attracting 417 million in its first week of trading. It's placed them among the top 20 ETFs across all asset classes by net inflows. This is for Solana. And it goes on to talk about like the fund's early success highlights how institutional investors are expanding their exposure beyond Bitcoin and Ethereum, seeking regulated access to Solana's high performance ecosystem. Guys, so institutional money finally has a way to get access to Solana, and we are seeing it in real time. The price, though, is down. I mean, market conditions are fucking terrible right now. It says that Bitwise chief investment officer, this guy's all over the place, remains confident in Solana's trajectory. So if I'm right, the combination of growing market and a growing share of that market will be explosive for Solana. And also, look at this. Applications built in Solana now host over 40 billion in user assets. Look at that. Look at that green line. So pretty freaking wild, man. 40 billion in user assets now built on Solana. Obviously, we have a lot of DePIN being built on Solana. And I think that it's going to be important, but we've got to get through this period here where things are freaking awful, man. I will say this much, though. Generally speaking, when you're in extreme fear in the markets, that's the time to be historically building positions and getting more into the market. Obviously, you don't want to catch a falling knife. But most people do the opposite. Most people panic sell here, and then they'll buy into the extreme greed. And that is just basic psychology. I mean, that's generally what takes place. Now, if you look at the crypto bubbles, disgusting. Like, so bad. So bad. This is worth saying here, pulling this up, guys. Dewey Bounce, by the way, Wintermute CEO has denied the lawsuit rumors. That's good news. That's good news. I have no doubt that they lost a lot of money in that whole October 10th thing and weren't happy with Binance, but hopefully they've got it sorted out. Maybe Binance has found a way to, make them whole without having a lawsuit. And that would make sense, really. I could see CZ, behind the scenes, like, hey, let's figure this out. They don't want to crush the whole market. I mean, that would be bad for everyone because Binance makes a lot of money on fees. Wintermute makes a lot of money by being a market maker. They need volume. So that would make sense for them to settle things behind the scenes. Hopefully that's the case. By the way, I talked about the liquidity crunch in the markets. If it does end up being a regional bank situation that they're kind of bailing out a bank, if you look back when we had the Silicon Valley Bank collapse and they bailed out the bank, we did see a little bit of a drop first, but then we saw Bitcoin go on a freaking tear. So we could see something similar again if the TradFi system has some weakness. Not to say we couldn't see a little bit of a sell-off to begin with because people would freak out, but I think it reinforces what Bitcoin's all about, right? All right, let's talk about some deep end stuff before we close out here. We got a lot to talk about. Hive Mapper MIP 25 has been finalized, so that is their staking MIP. We'll touch on some of the details, but I want to touch on more when we have more information. But one of the things they implemented here is that there was going to be a 4% instant unstaking fee. So when you unstake, there's a 2-week period, essentially, where you have a week, and then the second week you don't earn anything. You can do an instant unstake, but there's a 4% fee. It was going to be burned originally. Now it will be distributed to stakers in the region based on their staking percentage. So that was actually something I encouraged them to do rather than burn the tokens, redistribute to people that are staking to the community. I thought that was a much better idea, and they took it and ran with it. So I'm happy they did that. Here's how it works. So each week, 10% of global emissions reallocated from MIP 22. So that was the people training the AI tools. Now that they're trained, they no longer have that 10% allocation going to the AI trainers. So this is now going to be reallocated to a staking pool reward. Those funds are distributed exclusively to regions with active stake. So there's two factors. 70% of that 10% will go based on regional map progress. So areas where you have active mapping progress will get 70% of the 10% of global emissions, and then 30% will be based on consumption, so actual customers buying the data. Unused or unclaimed rewards from inactive or understaked regions are permanently burned. Okay, so I'm not going to get super into the details today on this. They give some examples, but they're going to have to show us where staking is taking place, what the regional caps are, et cetera. There's a lot of different factors here. Once we have the ability to look at that stuff, then I'll go through and run through some analysis with you guys on it. But until then, there's a lot. I mean, it's kind of a confusing thing without being able to see that stuff. Hive Mapper decimated like everything else, under 1 penny. $49 million market cap. Even FDV is under 100 million, but $49 million market cap based on the circulated supply. But man, under a penny. Man. These projects right now, I haven't seen. I mean, even in the last bear market, some of these projects I got into were, granted, we moved up a lot in 2024, especially. We saw some good returns, but a lot of these are back where we were in the bear market. This whole year, actually, for small caps has been a bear market. I know for like Bitcoin and Ethereum and some of the larger caps, not so much, but for small caps, certainly. WeatherXM has announced targeted rollouts. So you can get an NFT, kind of like what we've seen with like Daba, okay, where they set up the installation for you, and then you get a percentage of the rewards from that install. So in this case, they're looking at deploying in promising locations across Africa, India, Latin America, and turning areas with little data into active centers for climate information. They give an example here of some targeted deployments that they've done already. So it's through a network of 130 community deployed stations. Our partnership with this IoT company in Kenya helped farmers improve flood modeling accuracy by more than 30%, decrease water usage by 22%, and enhance yields by up to 18%. That's freaking cool, man. That is really cool. If we go down here, it does talk about how to participate. They're doing this on Base, by the way. So Base has been getting a lot of traction recently until really the last few weeks, and the market's gotten destroyed. But layer 2 on Ethereum. But it says connect your Base compatible wallet like MetaMask and ensure you have ETH bridge to Base. So ETH on Base for your purchase and gas fees to participate in purchasing NFT. So you can use the WXM token and USDC. There will be 3 different phases, and first you're going to get on the wait list. But the access to acquire one of the first 1,500 Weather XMXT NFTs at exclusive pre-sale prices. So it does have here, and you can go to their X page, but you can join the wait list here if you want to partake in that. So pretty cool. If you're a WXM holder, I mean, I wouldn't at these prices. Shit. I mean, like, I'm not. What are we at? $5.49 million market cap. So you can use your WXM to get in on some weather stations and earn more WXM. I don't know. Sounds interesting to me. The other thing that people aren't talking about with these weather networks, because I know a lot of people are like not super excited about the weather networks and their business case. We're seeing this already with Nebula, but I think maybe we could see something with Weather XM where they start getting into the prediction markets and team up with like a Polymarket or a Kalshi. There's certainly something there. All right. IONET put out this article. Says when AWS went dark on October 20th. So they've had a couple outages recently. IONET's decentralized GPU network kept running. In the last 15 months, they've had over 20 million in revenue. It's pretty meaningful revenue, man. So pretty cool to see IONET hitting some big metrics there. 20 million of on-chain revenue. Pretty sweet, man. And when you look at their market cap, it's a net $61.5 million market cap. This thing was way higher. We are down at 26 cents. I mean, shit. I mean, this thing was at 423. So what are we down like 96%, something like that? That's insane, man. I don't know if my math's right there, but 4 says 16, 7, 1 divided by 17, whatever that would be. Let's see. Yeah, about 90, 94, 95%. How about that? How about that math? Got to be excited about something. GeoNet. Check this out. They're getting some recognition. Deepin's getting some recognition.
More to get into there. I think what is lovely here this morning is that we can actually go dive into somebody who's been building for a while, and I think building towards a future that I don't know if you or I have really fully explored. So hopefully today we can go get a little bit smarter on crypto and the robot economy with Mike Horton, founder of GeoNet. There he is. Welcome, Mike.
What up, Mike?
Good morning, guys.
It is morning, Mike. It is morning. we are alive here.
That's a little bit of an awkward intro, but the main thing there is that Mike Horton with GeoNet. Robotics is starting to get eyes, guys. And I think that we are going to see, man, when we get through this turmoil and we start to see things rebound, some risk appetite come back, I think robotics is going to be one that thrives. I mean, right now, y'all, like, simply, stay solvent. I personally wouldn't be trading on leverage right now because we don't know where things can swing. But on spot positions, like, I'm, trying to DCA into my conviction plays and just hold through it because whether it's, later this month, whether it's January, whether it's, into 2026 when we see Jerome Powell replaced and we have a hawkish Fed share come in and cut rates and QE going out of control into the midterms, I feel very confident in my conviction plays that they're going to be a lot higher than where they are right now. Obviously, that anything can happen in markets in the short term time frame, so you have to keep that in mind and manage risk. But man, these prices, 11.63 cents on GeoNet right now. I mean, I started buying into this back in 2023, right around, I think, 6 cents. So we're about double that. But again, I mean, look at where we've gone from between now and then. So we're getting back down to prices that we were at, multiple years ago. And the fundamentals are so much stronger than we were at then. I mean, we're getting to a point where things are just so oversold. It's insane. So GeoNet's one of those high conviction plays. Obviously, we've got Aoki in there in the robotics scene.
The reason why this truly matters is because in the real world, you will have companies that will mix different models and devices, and they won't be able to coordinate unless they have a shared understanding of the physical world. We have now demonstrated this, and I believe there is no other company out there that has done this before.
Yeah, Aoki is helping robotics perceive the real world amongst each other, regardless. I mean, it's agnostic to what brand the robot's from. They're also doing the same thing with open source VR glasses. Guys, this is another one. Massive contracts working with huge robotics companies in China, and their token price right now down at 1.4 cents, $42 million market cap. And they've got like 7-figure contracts. So another one, guys. Gotta look at these projects. He says, as soon as these projects start earning money, the token plummets. Yeah, look, it's not the fundamentals. I mean, I think you can argue this much. Back in 2024, and really even before that point, up to that point, a lot of this was not revenue driven. It was very speculatively driven. And that's why all these projects were just really, even though deep end projects have, a good story behind them and had product market fit in some cases, many of them did not have the revenue to justify their market caps. But we're seeing the script get flipped here, where now we're seeing the fundamentals. We're seeing the revenue to the point where some of these are like, you could actually argue are undervalued, not just in a crypto sense, but traditional valuation sense. And this is something we've never seen with crypto projects ever. This is the first time. This is kind of this inflection point where, for people that are in the know, that are have their eyes on the space, it's like, hey man, this is freaking actually kind of nuts. Like to see some of these prices and valuations, but the building that's taking place. And I was talking to Tyler about this earlier. I'm like, the big problem for DeFi right now is I bet if you talk to an average person out there and an average investor, less than 1% of people even know this stuff exists. That will change over time. But for now, you have such a small pool of investors that are even aware of it. You have Rice AI that moved into the headquarters with Aoki. They're also working in robotics. So they just moved in. If you look at their page, go and follow these guys. So they've got about 18,000 followers, and their market cap's low, super low. They're sitting at 6.14. So they're working with Aoki in their offices. So that's pretty freaking cool. Another robotics play. And then Helium, we had their announcement. They're going to do open market buys. This started back on, I want to say October 20th. They've now had 13 buybacks worth nearly $500,000 worth of buybacks. So this is obviously big, guys. I mean, we have now a project that has revenue creating buy pressure on their token in the open market. So it's not just a matter of, okay, people earning the token and selling and the only buy pressure coming from speculative investors. Now we have fundamentals driving token price to an extent. And I did put out a post the day they announced this. So it's actually October 18th. And while the price is down on Helium a bit, obviously over the course of today, because the market conditions suck. If we go back to when they actually made this change, this announcement on October 18th, we were at $1.84. So even with all the turmoil that's taken place over the last few weeks and how bad the market's been, Helium is actually up 20%. And I would say a lot of that is definitely because of the buy pressure from these buybacks in the open market. So I think it's fair to say there has been a bit of a decoupling from the rest of the market because of that, because the fundamentals creating a buyer. And it'll be exciting to see how this plays out, especially as we start to see investors come back in and get interested in the space again. When that does happen, and you couple that with market buys, that is going to be fun to watch, man. Hopefully it's sooner than later. Let's bring up 375 AI. Man, I talked about them a lot last week. They had their token launch sitting at 3 cents. This thing got below 3 cents earlier today. $6.45 million market cap. Just silly, man. Silly prices here. They've got cameras they're setting up all over billboards all over the country. They've got a Fortune 20 customer already, a unique data set in a CEO that can deliver. So this one, obviously, I've been continuing to DCA into. These plays, man, it reminds me of 2023, fall of 2023. A lot of those plays went on to just go absolutely parabolic over the course of the next year and a half at different times. But seeing things so oversold, it gives me those types of vibes. It's a great time if you got powder. There's no doubt about that. That's what I got on the deep end side of things. And guys, I'll leave you with this: an AI update. Nothing to do with crypto, but things could always be worse. It's always remember to zoom out, touch some grass. You could be a music artist right now. We've seen AI hitting a lot of industries. How about this? This AI artist has broken into the Billboard top 30. Says this week's adult R&B airplay survey contains a potentially historic development at the anchor spot, number 30, thanks to this, I don't know how you say that name, Zanya Monet. How was I supposed to know? Well, I don't feel that bad about not pronouncing her name correctly. She's not a real person. Says that this is an AI-driven artist. Zanaya. Okay, so that's how you say it, like Shania. So it's an AI-driven artist that is in the Billboard list for music artists. Man, this has created a lot of debate on both sides of the spectrum, as you can imagine. This is something we're going to see, man. We're seeing it with the layoffs across the board. A lot of companies are saying it's AI reasons. I think there's a mix of that and people using that as an excuse to lay people off. But with the job reports coming out Friday, we'll see the true impact there. But man, the entertainment industry, whether it's music, whether it's film, and your movie stars, like AI is going to impact all of those markets for sure. Oh, so the world is changing, but there's a lot of opportunity out there, guys. The only thing I'd say is hang in there. I mean, we are in a space that we have a lot of really smart founders. We have a lot of people building. The fundamentals are stronger than they've ever been. We have revenue kicking into these projects. And it's been a really bad year for all alts, but DeepIn especially. It's been absolutely brutal. I've been in this industry now for nearly 7 years, and I can't remember a time seeing it this decimated. I think with FTX, the big difference was like, hey, Bitcoin dropped off a cliff, Ethereum, everything dropped with alts. This time it's been more frustrating because Bitcoin and Ethereum or some of these larger caps have run. You have the stock market ripping, you have tech, like all these other sectors are ripping, and the one that's really been underperforming is your small caps and alts and your deep in plays. But I'll tell you what, I feel a lot better holding these projects with revenue and a team actually building than if I was holding on to like meme coins. That would be a scary proposition where there's really no use case or anything to help the token. So I right now I'm just, man, I am keeping my eyes out for projects with the strong fundamentals, doing everything I can to continue building positions, just remaining patient while we work through these times. And in the future, we'll look back and be like, it was a tough time, but it did provide some opportunities. And I'll leave you with that. Appreciate each and every one of y'all. Make sure to like, make sure to share, subscribe to my channel if you haven't already. And I will see you next time. Peace.